The Wall Street Journal published a very telling article in early May. The headline reads, Americans can't get enough of the stock market. It's a very interesting piece. Everyone should read it. But what I want to show today is the data on household finances from JP Morgan. It shows that 41% of total household financial assets are committed to the stock market. Now, that may not sound lopsided, but that is a record that dates back to at least 1952. And we're showing that data here. And we've labeled on this chart the previous peak percentages, right? December 68, about 30% of household assets were committed to stocks. And March 2000, just under 40% were committed to stocks. Both of those time periods indicated wild optimism toward equities that led to major bear markets. Now, the story gets quite a bit more interesting, actually. We don't have comparable figures for the 1929 peak in stocks, but we do have some data on overall stock ownership. There was a pollster named Al Singlinger, and he found that about 21% of American households were in the stock market in 1929, right? So about a quarter of households owned some stock at one of the greatest market peaks of all time. And that poll actually hit 50% in 1999. That was the first 50% reading. So half of American households were in the stock market at the 99 top. And the interesting thing is that recent polls show that percentage is even higher today. In June of last year, for example, Gallup found that about 55% of Americans owned stocks, and numerous sources have cited the millions of new brokerage accounts that have been opened in the past year. So this, we think, is the power of groupthink. At certain points in the wave structure, everyone embraces the market at the same time. Elliott wave principle described this psychology way back in the 1970s, and this is exactly why we study market history so thoroughly.